Hey, ladies and gentlemen, how are you? It's Renee from My Liberty Loans with Anthony here.
I'm glad to be here today.
That's right. That's right. Today we're going to talk about fees. Fees that you go ahead and people advertise the lowest interest rate and how they get you to sign up or put in your application. So, I've had clients in the past that say, hey, Renee, um, the 20-year or the 15 years at 1.875, and how come you can't match that? And then I'm like, well, I can't. I can't match it if you're not going to pay any points. But some of these lenders, they'll advertise this low rate with you paying points. And listen, Anthony's been in this business a lot longer than I have.
We've been
And
seeing it all over the place. And it's not to say that paying points is a negative thing, because it's not. But understanding like an apples to apples comparison of what you're getting versus what you're paying for. So perfect example is right before the show today, we had a gentleman call up and said, listen, my brother-in-law sent me over an estimate. On the estimate, the rate was on a 15-year fixed. It was 2.125%. But I have to pay $3,500 to get that rate.
right,
Not necessarily a bad deal, but here in this scenario, the person's loan was only $140,000.
right,
So the difference between buying that rate down, so let's say it's $3,500 for the 2% rate, versus the next rate, which he didn't have to pay anything, which was 2.125% to 2.25%, the difference in the monthly payment was $12 a month. Right? So it's becoming a psychological thing where lenders are pumping into people's heads the psychological impact of having a 1 in front of a number.
right.
So it's 1.75, 1.875, 1.99.
Yeah.
But people stop and they only look at the first page of the estimate and they don't go forward to the second page of the estimate. And the difference of $13 a month over 12 months a year,
That's correct.
and in this scenario, a 15-year loan, it was basically a break even. I'm
Yeah.
going to give the bank $3,500 up front, and over the next 15 years, if I even keep the loan for 15 years, I'm going to save about $2,500 to $2,600 a month.
Right.
For the over the life of the loan.
So, and that's the thing. You have to look at your break-even point. How much when you're buying these points? How long will it take you to break even out of the points you have paid? Because at the end of the day, it's the cost of money. So
You got to look at your scenario.
Yeah.
So if it's a scenario where you're going to see heavy, savings, you're a younger couple getting into a home, and maybe you have a $300,000-$400,000 loan, and by buying that loan down 1%, you might be saving $100 to $200 a month, and over the life of that loan, for $2,000 a year over 15 years, you're going to save $30,000. Yes, it makes sense.
or even a 30-year, right? Like if like, hey, this is my forever home, or this is my home that I'm going to be in 10, 15, 20 years, that at that point, yeah, that's a conversation. Yeah, you should look at purchasing it
What
down.
you're looking at right now is the fact that these rates that you see now, you're probably never going to see again
No.
for a long period of time. If you do, it'll be a long, long time moving
Right.
forward. So what lenders are trying to do and what certain companies are trying to do that we see is they're trying to shift and go back to that refi boom. So certain lenders out there that have their names on stadiums, little
Right.
Rockets and little
Right.
depots,
Yeah, yeah, yeah.
they can't close a purchase business right now because their underwriting timelines are too long.
Yeah.
And their period between taking an application today and getting to a closing table on a purchase is too far away. So they've gotten a really bad name with performance. And so they're going back after that whole refi boom again and trying to catch lightning in a bottle a second time.
Right.
To say, well, if I have a 15-year fixed, well, go back out and tell them you can get them 1.75% and get them to the table, get them to apply, get them to give you the documents, give them the estimate. And what happens is people look at it, they look at the page one and say, wow, that's a great rate. It's a great payment. My payment is going down. They sign the paperwork. And then you start getting down to the brass tacks of, well, wait a minute. I'm basically just prepaying you the interest to get the same deal that I already have right now. It's not a great deal.
Yeah.
So again,
I agree.
It has its pros and cons. It has its applications. You need to look at it and look at that block A. And what we always tell consumers is when you're comparing, and whether it's us, whether it's someone else, it doesn't really matter. The estimate, the new loan estimates are broken down into sections. And in block A of that section is lender to lender to lender. Everything else on that estimate, whether it's a title company that's local in your area, the section where the government records taxes, the Palm Beach County, tax collector or whatever county that you're in, it's going to be the same no matter what.
Right.
No matter who's doing the loan, it's based on the loan amount and based on how many pages are on the loan document. So it's irrelevant. Loan lender to lender, that's going to be the same. If you're escrowing taxes and insurance, the calculation is the same.
Right.
So what you want to look at lender to lender is that block A. What are the origination charges? What are the discount fees? What are the processing fees? What are the loan underwriting fees, or whatever names that they want to name it to fluff it up?
Right.
And then look at your principal and interest payment. Your taxes are going to be the same no matter where you're going. Your
Exactly.
insurance, go the same no matter where you're going. So you want to look at, well, here with Renee today, my total fees are $1,000 and my payment is $900 a month. Over at this other company, my total fees are $5,000, but my monthly mortgage payment is $10 lower. Does it make sense when we take that savings over the term of the loan? How many months is it going to take us to recoup?
And you have to remember that you have to take this on, and you have to divide that by how many months you are going to pay that loan. And it's got to be something that's financially sound for you. So if you're saying, okay, this makes sense for me, then it makes sense. But if you're going to be in a home 5 years, which the average home sale is 5 to 7, you have to say, okay, is this worth it for me? You know what I mean?
Be realistic.
Yeah, be realistic. And listen, right now the interest rates are at the lowest we've seen. That refi business, we're like, okay, once you refi, where are you going to go from there? You know what I mean? Unless you're going to be buying that house, so you won't see that refi or refinance person back until they're going to purchase their next home.
Exactly. And it's about, listen, our business is all about service. And where we excel right now, obviously, is our turn times. Mm-hmm. We're getting loan approvals back on typical scenarios same day or within 24 hours. We are closing refinance transactions in 6 to 7 days. We're closing purchase transactions in 11 to 15 days.
Yeah. I mean, it's been pretty quick, actually.
Yeah. So what we do is we excel at telling you everything that you're going to need up front. So we'll ask you a couple of quick qualifying questions. Those questions are not to pry into your life, but it's to give you an idea and for us to kind of ascertain what is the underwriter going to look for. If you're self-employed, they're going to look for personal and business tax returns. If you're a W-2 borrower or a W-2 wage earner where you work for a company, they're probably not going to ask for your tax returns unless you have investment properties where you're collecting rental income. So you just need a W-2 and paychecks. What we want to do is we want to give you a roadmap of everything that you're going to need up front. And the benefit to that is
speed,
but you're also not going back and forth with kind of that jack-in-the-box situation where
that's
at
the worst.
Some point in time something's going to pop up that you didn't say anything about or that nobody asked about.
Or that you forgot, you know what I mean? Or it's just certain things. I mean, a lot of people got a lot of things going on in life.
You may not know. And a perfect example is you could take a borrower that has 5 empty lots, like in another state, like Tennessee is a big one. South Carolina is another big one, where they have these lots that are 10 grand, 20 grand, 30 grand. They don't tell you about them, and they're lots. They have no mortgages on them. They don't have any mortgages on them, but there's taxes that are associated with them. And so you have to factor those taxes in, and those little rinky-dink lots, even though the taxes might be, $300, $400, $500 a year, but if you have 4 of them or 5 of them, well, you just kind of added back what may be the equivalent to a small car payment to your loan. So it's going back and just finding out and doing that due diligence and looking at, well, where's the down payment coming from? Where's the income coming from? So that we can iron it out. And when we ask for those things up front, it's to give you a good indication of these are the things they're going to ask for. Not that we need it all like right now, but so that as you progress through the transaction that you know what they're going to ask for.
Right. And listen, at the end of the day, we want to get this in and out as fast as possible because rates change on a daily, as much as it's not that crazy painful, it is painful to ask all these personal documents, at the time.
Yeah, and also the longer you need the lock, the more it costs you and the higher your rate goes.
So that's a great point. Yeah.
I had a client of mine who was referred to me by someone I've done a lot of transactions with, and they went to their local bank, and they told them, you're not going to see a closing table in less than 90 days.
Yeah. Absolutely.
We're 7 days done.
Yeah.
So it's that period of time where you're looking at, well, this is where they're quoting you your rate today. Is that rate based on a 30-day lock, 60-day lock, 90-day lock? The longer you lock, it's not the same. Like, they're not going to give you the same rate locking for 7 days as they would locking for 90 to 120 days.
Absolutely.
So the longer you go out, either the more it's going to cost you or the higher that interest rate is going to go.
And I agree. Listen, I always say time is money.
Absolutely.
And with that said, everyone, have a great day and have a great week. So if you ever need us, our number is 561-799-4015. You can reach us at Anthony at Marino. Anthony?
Marino
at mylibertyloans.com and Renee at mylibertyloans.com. You need to switch that. Anthony A. Marino, you like it better?
Everybody's got it.
Oh, okay. Whatever.
He's Anthony.
Take care, guys.
Bye.
Bye.